And welcome. It's Mary Ellen McGonagle with your weekly Edge show for Friday, July 7th. Today, as usual, we're going to take a look at the broader markets and see where did we close for the week. We'll also take a look at some of the underlying activity among market sectors and industry groups to get a feel for where money flows took place last week. And as always, with an eye toward preparing you for not only next week, but beyond as well. Also, headline news that drove price action. I'll walk you through that. It's very critical as it relates to why the markets pulled back and what we can anticipate potentially going forward. Last up, viewer question of the week. And this week, that question is all about when to know that it's time to sell your stock. And I will share a time-tested, rules-based system that I've used over the years. So from here, let's take a look at some of that data from last week. Earlier, we did get on Monday, or actually that half day, we did see that the industrial side of the economy did slow down in the month of June. And this is in line with what we have seen in that industrial side. So nothing alarming there. We did then see factory orders rise in May, and the relevant piece of that data was that the increase was driven by transportation-related orders, and we're continuing to see vibrancy there, auto-related mainly. On Wednesday, we did get the notes from the Federal Reserve's latest meeting, and it did show more rate hikes ahead. No super big surprises. However, the talk did pull the markets back a little as higher interest rates came back into focus. On Wednesday as well, we did have an ADP report that private jobs surged in June. That was quite alarming in the sense that the Federal Reserve does not want to see employment rise because it will keep inflation elevated. And then from there, we did get monthly employment data for June. Fewer jobs were added. That was good news. However, wage pressures did remain. This is another element of inflation, higher wages, more spending, hence higher inflation. So net, a mixed report on Friday today. Now, originally it was taken as a positive report, but the markets did fizzle into the close, which is not constructive. Next week, we do have more inflation data on deck, core CPI and core PPI data. That's consumer and producer price index information. Also, Fed Chair Powell will be speaking, as will 5 different Federal Reserve officials throughout the week, which may create noise and in turn potentially impact the markets. So from here, let's go ahead and take a look. Where did we close for the week? And here we are with a daily price chart of the S&P 500. The index did pull back about 1.2% for the week. And in fact, it pulled back right to this 10-day simple moving average where it found support. That's certainly constructive. Overall, we did get lighter volume during last week's holiday shortened period. So we can see that pullback did occur on below average volume. But let's take a look at the momentum indicators. The RSI still up here above 50, and then likewise with the stochastic. So net, the uptrend remains intact in the S&P 500. From here, I'm going to share with you the 11 underlying sectors in the S&P 500, and I've gone ahead and added a relative strength indicator, and it's sorted in descending order so that up here in the upper left quartile are your relative outperformers, and then down in this right side, the underperformers. So first up, we can see consumer discretionary up here at the forefront. The overall industry group performed in par with the markets, but it is remaining up here in a very nice, strong uptrend. Next up, we can see industrial stocks. Industrial stocks also similarly in line with the markets. Both groups were down 1%, but also retaining its uptrend. And both of these sectors are cyclical, and the continuation as far as their relative outperformance signals that investors are on the lookout for the economy to remain strong. From here, we can take a look at REIT stocks, and they had a big week last week. They also outperformed this week, up 0.2% relative to the S&P, down 1.2%. And this is another sector or area that does outperform when investors are on the lookout for the economy to grow. So of note, that is what is shaping up, certainly with last week's price action. From here, we can take a look at some of these weaker areas, and it is staples and healthcare down here at the bottom, both defensive areas as well as utility. So we are seeing that continuation move into cyclicals, and then technology stocks. They did underperform last week, down 1.5%, but held support at this 21-day simple moving average. I will share with you in the next segment an area that is highly impactful to technology stocks as well as some of the industry groups. In fact, let's go ahead and take a look right now. I use ETFs that are really quite helpful in getting your arms around what is taking shape by way of money flows and potential rotation. And again, strength to weakness. And up here in that strongest quartile is the yield on that 10-year treasury. And take a look. This is that gap up on Wednesday after we received that strong employment data report. Actually, this is the Thursday into Friday move, but net, a general uptrend shaping up in interest rates. Now, this is generally not constructive for high growth areas such as technology. Higher interest rates reduces the value of their future growth, so we may see a continued move away from tech. That remains to be seen. So in technology, we can see here with IGV, this is the software ETF, and the group was down more than the markets, 1.8%. Now clinging to its 21-day simple moving average. The momentum has shifted into more of a downward phase, so I'm keeping a close eye on that area. Another technology area that was down even more last week is semiconductors, down 2.5%, and we can see that momentum shift that took place. So it could very easily be a pullback after this sharp May into June advance. Again, remains to be seen. For those of you that haven't already, take a look at my MEM Edge report. You can use that link below. I'm all about staying very much on top of that sector rotation, but also on whether you can remain in stocks in that area. I have a suggested holdings list that has both software, semiconductor, as well as industrial and other areas. But moving along with this view, I did want to point out that Brent crude oil pricing was up for the week. We're not quite out of the woods yet, but we did see a move, particularly today, into energy stocks, all about consumption, with oil being higher than anticipated, and then this higher demand is being met with lower supply. So in the end, I'll continue to keep an eye on that and see if that rotation into energy gathers more steam. So from here, let's go ahead and take a look. I mentioned I would share with you that concept of what to be on the lookout for as a signal that you may want to exit your stock. This strategy is more, I would say, swing trader into intermediate trader. So first up, we are going to take a look at AEM, a gold stock that broke down a little over a month ago, and share with you some of those characteristics that could have foretold further downside. This is AEM, and we can see that a couple of factors that I want to point out to you that could signal further downside. First up, from my work, if the stock trades below this key 50-day simple moving average, that is definitely a sell signal for me from my work. But when you can marry that with this momentum shift into negative territory, that RSI trending downward below that 50, and then also if we go down further, we can see this MACD entering negative territory. So those three factors combined oftentimes are an ideal signal that it is time to exit the stock and look elsewhere. We can see the deterioration that took place beyond that. And we actually have two examples here with AEM and that break below the 50-day with the momentum shifting downward. So from here, let's go ahead and take a look at another factor that can really be helpful as far as formulating your sell plan. And first up, I will share with you Barrick Gold, GOLD. In essence, are other stocks in that industry group also coming under selling pressure. And in fact, we can see that this particular stock did as well break below key support and have negative momentum shifts in their signals with that RSI and MACD. And from here, we can take a look at another stock that has been trending downward, but most importantly, we want to be on alert as to what to be on the lookout for that your stock could easily have further downside ahead. This is Tootsie Roll. TR is the ticker symbol. And again, we can see the stock price break below that 50-day. And I will share with you, we did have a couple of other periods where the stock broke below that 50-day as well, going back into this February period in particular. However, it was able to recover. This particular break had several factors that also coincided with this break below the 50-day, and one of them is very high relative volume on that break. We can also see the MACD entered into negative territory below that net neutral. I will also share with you one other consideration when you are looking. We talked about gold and looking at other stocks. With Tootsie Roll, we can take a look at the consumer staples sector. That's a group that this stock is a part of, and we can see deterioration overall in that industry group. And then last up from here, if you want to take it a bit further with a name such as Tootsie Roll, I'll also share with you that Hershey has been under selling pressure as well. And one of the key factors here is not only deterioration in the sector, but also both companies rely heavily on cocoa as one of their key ingredients for their product. And here we are with a daily price chart, and you can see the escalation in price of chocolate, which in turn is going to impact their bottom line. That's it for this week. Everyone have a fantastic week, and I'll see you here again next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.